Good morning. Good morning, everyone. This is Bag of Dawn at Stock Market Caddy. It is Saturday, November 7th at about 11 a.m. I received two phone calls this morning, two asking virtually the same question. They wanted to know how both Swing Machine and in particular, and what this video is about, how did Nicklaus do this past week with the volatility, with the market having gone down the week before the election and then with the election, how did Nicklaus do? So we're going to show you the results of Nicklaus and the timing of Nicklaus, and we're also going to give you a year-to-date and a rolling 12-month performance. And we're going to try to do this within the 10-minute restraint of YouTube. So if you are watching this on YouTube, be sure to put the YouTube into high definition so that you can get the best quality possible. Now let me show you this. The VIX daily component, which is a big part of, well, let's save the Nicklaus. Let's save the VIX for a moment. But it is a big part of what we do with Nicklaus. The Nicklaus ES, we'll start from the bottom. This is the S&P Nicklaus. And on November 3rd at 5 p.m., the Nicklaus said to go long. Now let's look at that date. Okay, that is November 3rd. That is Tuesday at 5 p.m. The polls had not yet even closed. Okay, so it's kind of interesting. So people were still very much voting. In fact, they're still voting, but that's another subject. That trade, if you had taken it, and we have members that did with one mini contract, we probably have members that did it with more than one, $7,425. The NQ, November 3rd at 5 p.m., long, $16,575. The YM is long, November 3rd at 5 p.m., you'd be up $4,525. The YM is the Dow, this is the NASDAQ. RTY is the Russell 2000. November 3rd at 5 p.m. long, you'd be up $1,895. And then the confirming signal was the short on the VIX. Imagine that, the VIX short before the election results are even begun to being tabulated. So what did the market know or think it knew? Regardless, on November 3rd, it confirms these longs with a short on the VIX, and that is up 6,000. So if you had taken that signal as one of our members and had put down one mini contract on each of those markets, the 3rd, today being the 7th, you would be up $36,500. $36,500. Now, let me be the first to say, it is true. Just because something happened in the past doesn't mean it's going to happen in the future. Nicklaus is an algorithmic trading program, a timing model. And let me show you or give you a glimpse behind the curtain, show you how it works, and let me show you the historical performance for the last year, and I'll even give you a glimpse of the last 12 rolling months. Now, we are not, let me preface this, or let me add, we are not a broker. We are not a financial advisor. I am not a money manager. We do not make recommendations to buy or sell anything. We develop tools, algorithmic trading tools, that people can use in conjunction with their own disciplines. To that end, we are a mentoring site. So please, this is not in any way, shape, or form some sort of solicitation to manage your money. Not interested in it at all. We are about teaching people how to trade the markets for fun and profit on their own. So very, very important. But let's delve into the Nicklaus. Okay, now this is the chart that is running the Nicklaus timing model. And before you jump to conclusions and say, oh, that's what he's using, I see it, He's using the Bollinger Bands. Well, we love Bollinger Bands, but Nicklaus doesn't use the Bollinger Bands at all. Bollinger Bands do provide some perspective, but that's not what he uses. So let me give you a little backdrop. And let's come here. And let's see if we can do this together. There we go. Data number one is the ES, the S&P futures, the data. Data number two is the VIX, the continuous VIX. You see that? And data number three is the 10-year bond. We're feeding three data streams into this chart. From these data streams, there is a strategy that we have written. It's our proprietary strategy, our intellectual property. When I say our, my beautiful wife Susan and I, our property running on the TradeStation platform. So let's take a look at the performance report. Bear with me. We're going to open this up. And we want to drill down. No, don't get excited. We're not going to go back years and years, although we could, but we're not going to take the time to do that. What we want to know, what you want to know, is what has been the annualized performance since January 1. If you had run or had taken every single signal of the Nicklaus since January 1 of this year, you would have had a total of 31 trades. 51% would have been profitable, and for a trending style of strategy, that's pretty good. The profit factor is 3.86, meaning you would have been making close to $4 for every dollar you lost, but the net profit is 100, and I'm going to write this down with you, $107,037. If you don't mind, we're going to round this off. Now the rolling 12 months, let's do the rolling 12 months, which takes us back, right? It goes back 12 months from today, would have been even higher at $111,075. Now let's try to do exactly the same thing. And we got to reset it. This is for the NQ. Let's go to the annual performance. And how about that? The annual performance this year of Nicklaus is $150,000, one contract. The rolling 12 months is $156,345. And you can see the performance. Let's go to the YM. And that's the weekly. We want the annual. The last 12 months, or yes, year to date on the YM, which is the Dow, is 83,860. The rolling 12 months, 87,870. And now let's look at the Russell on an annualized basis. And these are exact. Now, the reality of it is you probably could have done better, but we'll comment on that in a moment. This is the Russell. Year to date is 44,790, rolling 45,185. And then we come to the VIX component itself, and let's get that on an annualized basis. So it's 22,120 for the VIX, and on a rolling, which takes us back, all the way to November of last year, 22,270. So what does that total? So we have just totaled those numbers. So if you had placed, and this is all scalable, but just one futures mini contract on every single signal year to date on each of the 5 markets, Nicklaus timing model, you would have in your account $407,922. If you had done it on a rolling 12 months, you would have $422,707. Now, what I started to say is, if you had done scalping, you potentially, if you had a little bit of trading skill, could have taken the high water marks and could have actually done better. And of course, if you weren't so good, you could have done a little bit less. But if you took every signal and carried it through to its conclusion, that's exactly what you would have.